पैनल डिस्कशन हो रहा है। बीएससी डे आज हम सेलिब्रेट कर रहे हैं। पहले सीधा निकुल सर के पास चलते हैं, सीधा बीएससी कैंपस में।
Asset management, HDFC Credila, venture capital, real estate, all of that. So if you take the total market capitalization of all the listed companies in the group at the time of the merger, it was about $175 billion US.
Wow.
That was the kind of wealth we created. If you ask me what was it that contributed to that, I would say number one, truly the highest standards of governance. We were willing to compromise on people not being very efficient, not being very great in their job, but even the slightest, even the tiniest question on governance would never ever be tolerated. So that I would say would be one principle. Second principle is we kept the head count very low, very small. We didn't have too many people. For an asset base as big as ours, we had just about 4,500 employees in HDFC Limited at the time of the merger. We invested a lot in technology and systems, and we kept an atmosphere in the company which was free of politics. If you ask me honestly, that was one, I consider that as one of the most important contributors to our growth, and everyone contributed. And the third, I would say, is that we had very, very clear goals that we set for ourselves. You know, I used to meet international investors from the 90s. As Hemendra Bhai said, foreign investors, started coming into India in the mid-90s. And I used to continuously meet these investors. And in the 90s, late 90s, we had no competition. And then suddenly the banks started getting in, State Bank came in, ICICI came in, and some of these banks started sending, people over to customers' houses to help them fill up forms and stuff like that. We never had all that. So our investors used to come and say, okay, you are losing market share. Obviously, if you have 99% market share and someone comes in, you will lose some market share. So we continuously kept telling our investors that we have 4 very, very clear objectives that we set for ourselves. And these objectives did not revolve only on growth. Growth, yes, but growth in a profitable manner, not growth for the sake of growth. So there was clarity of thought in what we wanted to do. And we kept saying that in a financial services business, market share is the most irrelevant thing. Because when you are in the business of lending, you can get all the market share you want. You sacrifice your asset quality, you sacrifice your lending norms, you sacrifice your margins, you can get all the growth you want. But that is not going to contribute to long-term profitability. So our objective was, number one, growth, but profitable growth. Number two, increase our return on equity by 100 basis points every single year, which we did from 1994 till 2009. If you see, every single year return on equity went up by 100 basis points. Third was every single year to lower the cost-income ratio. Our target at that time was to bring it down to single digit, and finally we brought it down at the lowest it had come down to about 8.1% or so. And the fourth was to take no asset liability mismatch, run a very simple business, don't take any unnecessary risks. Growth opportunities were always there. India was growing and India continued to grow. And I truly believe that today the growth opportunity for financial services in India is absolutely phenomenal.
I just want to take that number again for the benefit of our viewers. What was the initial share capital of HDFC Limited?
Paid up capital was 10 crores. I mean, at the time I joined in 1981. Paid up capital, and HDFC was 2 years old at that time, 10 crores. And the market capitalization on the day I joined was 8 crore 50 lakhs, 8 crore 50 lakhs, roughly.
So it was below par?
It was below par. Profits were less than a crore.
And when the merger happened, the combined entity, all the group companies put together,
$170 billion US. 170 billion.
I'll run out of that typical counting style even to understand the multiplication it has had. Now, Mr. Ramamurthy, there is BSE of the past, there is BSE of the present, and then BSE of the future. What should we start with?
Whatever your viewers would love to hear.
The past and the future is what viewers would like to understand. The present for BSE under your leadership has been nothing short of incredible. I mean, BSE itself has become a multi-bagger stock now. From the COVID low of about sub 300 rupees, it is now nearing 3,000 rupees. A lot of attribution is going to your leadership, that you've changed the things. You've really got the motions into play for BSE. What is that one incremental change which you've done at BSE that the energy levels are back? Excitement is back. Shareholders are happy.
Okay, so you might have seen the Mahabharat serial, which always used to start with My Samay Home. So if somebody were to make a serial, My BSE Home, I think it will cover all these great things that have happened. And you will see lot of lessons to be learnt, lot of principles to be done, lot of do's and lot of don'ts. When I joined BSE probably around 15 months back, clearly there was a lot of legacy as you started with, a lot of nostalgia, a lot of history. But I came here to make the future, to whatever extent I can, in the limited time that I have. Two principles which takes you through ages have been nicely narrated by the two great doyens with whom I have today the pleasure and the greatness of sharing the same dais, which I am very honored and humbled about. One, both of them talked about corporate governance, and two, they talked about risk-taking within the limits, not over-risk-taking. The third thing which I thought is very important for me to change things was listen to the voice of customers. People like me come and go. People like this history have been there for a long time. There are a lot of participants in the market who have been there for a very, very long time. You just go and listen to them and understand what they want you to do for the betterment of market. And it works. Voice of customer works. That's the only thing which I think I'm trying to do, because of which today BSE is starting to grow in a good way.
Mr. Mistry alluded to a very important corporate number, market share. And BSE was always compared with the other exchange when it comes to market share. They were losing their relevance, if I may use the word, but they're getting their market share back, they're getting their profit back. Which is that wheel you were able to turn that everything is moving in the right direction, both in terms of profit, market share, and also the future business?
So if you look at it, exchange is a high fixed cost game. So the fixed cost to some extent was already put in place in terms of various things like technology, people, all were in place. So there have to be users to this. When users come in and they start using this high fixed cost model, then it starts giving you revenue. For people to come, there should be something as a USP for you to offer, because of which they can come. So for that you have to listen to them to find out what they want. The way the Indian markets have grown over a period of time, derivatives have started playing a very important role in attracting volume, not in derivatives alone, in all the other sectors.